Today, we're diving into a really fascinating story unfolding in Africa. It's all about a new kind of digital money called stablecoins. And on the surface, it's a story about innovation, about giving people more financial power. But there's a huge twist, one that could actually challenge the economic future of entire nations. And our story really kicks off right here, with this quote from law professor Iwa Salami. She saw a photo of people celebrating at the Africa Stablecoin Summit, and her gut reaction wasn't excitement, it was dread, a sinking feeling. So why on earth would a celebration of new technology make an expert feel that way? That's the big question we're going to unpack.
All right, so to understand that sinking feeling, we first have to understand the party. What's all the excitement about in the first place? Why are stablecoins catching on like wildfire across the continent? Well, the reasons are incredibly practical. For a lot of folks in small businesses, the day-to-day financial reality can be a real struggle. You've got local currencies that can swing wildly in value, making it hard to save. You've got inflation eating away at your money, and trying to get your hands on a more stable currency, like the US dollar, it can be a nightmare. Oh, and sending money to family across borders, often super slow and really expensive. People are desperate for a better way. And for many, this is it. This is the solution, the stablecoin. The easiest way to think about it is as a digital token that's designed to hold its value. How? Well, it's pegged or tied to something stable, and that's almost always the US dollar. It's basically a tech-based answer to all those economic headaches we just talked about.
And listen, this is not some abstract futuristic idea. It is happening right now. Adoption is absolutely surging in major economies like Nigeria, Kenya, and South Africa. People are using these things for everything, saving their money, protecting it from inflation, and sending funds to loved ones abroad, all in a way that's fast and cheap.
So, on one hand, you've got this amazing story of financial empowerment. It looks like a huge win, right? But this is exactly where the narrative pivots, because behind all the clear benefits, a really profound risk is starting to come into sharp focus. And that risk really starts with this one single number, 99%. Just let that sink in. That is the jaw-dropping percentage of the entire global stablecoin market that is pegged to one currency and one currency alone, the US dollar. I mean, just look at this. That tiny little sliver over there, that's every other currency in the world combined. So, when people in Africa are adopting stablecoins, what they're really doing almost every single time is adopting a digital version of the US dollar. And that is the heart of the problem. Which brings us to this huge concern that economists call dollarization. This is that tricky moment when a helpful digital tool for one person becomes a massive problem for an entire nation's economy. To put it simply, dollarization is what happens when a foreign currency, in this case the digital US dollar, gets used so much that it starts to push out the local currency. And when that happens, a country's own central bank starts to lose control. I mean, how can you manage your economy when a huge chunk of it is operating in a currency you have absolutely no power over? The short answer is, you can't. It strips away your monetary sovereignty. And here's the kicker. Stablecoins put this whole process on steroids. You see, old-school dollarization was clunky. It was limited by physical cash, by bank rules. But stablecoin dollarization? Whoa! It puts a digital dollar straight onto anyone's smartphone instantly. It completely bypasses the banking system. It sidesteps all the currency controls. It basically creates a shadow financial system that the central bank can't see or influence. Now, get ready for the really ironic twist. You'd think, okay, we need more regulation to fix this, right? But what if I told you that a new American law, one that's designed to make stablecoins safer, is actually about to make this problem a whole lot worse for African nations? Okay, so here's how this ripple effect works. There's a US law coming, the Genius Act, and it's going to put these USD stablecoins under really strict rules. That's a good thing, right? It makes them safer, more trustworthy for everyone. But here's the unintended consequence. For people in economies with shaky currencies, these now super-safe digital dollars look even more attractive. And that just speeds up the whole process, shifting monetary power away from African central banks and, weirdly, towards US regulators. And again, this is not just a what-if scenario. In Nigeria, households are already flocking to stablecoins to protect their savings from the naira's decline. In Kenya, these digital dollars are creating a way to bypass amazing local systems like M-Pesa. In both cases, the local central bank's toolkit gets weaker, and there's a real risk that money just starts flowing out of these economies altogether.
So, with this massive dilemma on their hands, what's the game plan? Well, thankfully, the conversation is shifting from just pointing out the problem to actively trying to solve it. Experts are floating 4 main strategies that African authorities could use to get ahead of this.
Let's quickly run through this policy toolkit. Option 1, they could try to impose limits on these foreign stablecoins. Option 2, and this is maybe the hardest but most important, just double down on good economic policies to make their own currencies stronger and more trustworthy. Option 3, you could fight fire with fire and launch your own stablecoins, maybe backed by local assets. And finally, Option 4, issue an official, government-backed digital currency, a so-called CBDC, to give people a credible alternative.
When you boil it all down, this whole thing becomes a fundamental question of sovereignty. It's a balancing act. How do you embrace the incredible power of financial innovation without giving away your ability to control your own economic destiny?
So here's the real takeaway. The benefits of stablecoins are not a fantasy, they are real, and they can help a lot of people. But you can't just look at the upside in a bubble. Policymakers have got to get ready to deal with the huge and maybe unforeseen implications for their countries.
And that brings us right back to where we started, to that sinking feeling hiding behind the celebration. This technology offers a genuine shot at financial inclusion for millions of people, but it forces us all to ask a really tough question: at what cost?